Oh, hello. I forgot to turn myself off from mute. Let's start again. Oh, God. Thank God it's Friday. Good morning, Cam. Afternoon, even. Jesus, Ryan. Oh, God. Pub? Anyone? Anyone for the pub? Tell you what, we will get the legals out the way. Nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PiQ Global Limited, trading as PiQ or PiQ Suite, or its affiliates, including the hosts, which is myself and the lads at AlphaPicks. And here he is. Hang on, I'm guessing he struggled to get into the AlphaPicks account, which is why he's now coming in through the back door. One sec. Come on, Jess. Come on, Jesse. Come on. You can do this. Yes. Hello.
Good afternoon.
Good afternoon, Squire. How are you?
Good. How are you?
I'm not too bad. I'm not too bad. How come? Like, have you been locked out of the official account? Is that why we're on this one?
No, Phil's going to be on the AP one.
Oh, okay. Nice,
Um,
nice, nice.
yeah,
Perfect.
when we're not together, I'll join on my personal ones.
Oh, I feel all
He
nice
should
and
be
special.
here. He should be
Um,
here any minute.
Perfect, perfect. Just do you know any jokes? Any filler to keep him going?
Do you know any jokes? Um,
Ones, sorry,
have we?
ones that are repeatable, and I can pass off the if I want sponsorship for the spaces, rather than it's not this. It's a family show. Um,
Yeah.
oh, there, mate.
I've
Right,
got
let me just go on.
jokes. Sorry, man.
No, go for it.
Um, how's your morning been? We'll start with a little
To be
catch up.
honest, it's been long. It's been very long.
Yeah.
Yeah, I'm doing my good deed. I'm helping to cover for the European desk on Forex Live, which
Okay.
means I've remembered that there's like a 5:30 a.m., which I've managed to forget after many years of being up at 5 a.m. So that was that was an inconvenient truth that I heard. Oh, here he is. One sec.
There you go.
Invite co-host. Right. Dun dun dun. Let me just whack this tweet out, and it's live. There we go. Right, go on. What's happening? Tell us. The Friday fix with
Morning,
PiQ and morning and AlphaPicks. Right, what's happening?
Yeah, morning, guys. So I actually will kick off with a piece that sort of started on Tuesday and has progressed through to Friday. It's actually what I wrote on this morning about Japan. So we mentioned the chap's first name, which is quite difficult to pronounce last week. Remember, right?
Yoshida.
Going to now refer to him as a Shiba only. And so he called for a snap general election, which is going to take place in Japan October the 27th. But it's quite an interesting one because the price action, which we actually spoke about this time last week, was initially yen strengthened significantly off the news of his winning the LDP party nomination.
Yeah.
And obviously Nikki 225 was down about 5% on Monday close. But he actually later in the week surprisingly offered some comments that he doesn't think the Bank of Japan should raise interest rates, which goes in contrast to the reaction initially from the markets because they thought he was certainly a case of someone who would be happy for the
Yeah.
normalization of
It
interest
seemed to
rates.
be. It seems like I think everyone was just hoping he would be like a politician that just shut up and kind of let the Bank of Japan do what they want to do, wasn't it? But basically,
Yes.
one of his first public statements was kind of like, right, I don't want us cutting any more. Sorry, I don't want us hiking rates anymore. And everyone's like, okay.
Wait a second. Yeah, yeah.
So we're like,
Um,
it's almost like carry trade inception. We're unwinding the unwinds, which we unwound before we were unwinding.
yeah,
So it's like, yeah, good one. Good luck if you're
yeah.
trading the yen.
Well, that was interesting because Jesse actually had a great chart of yen positioning, and it was basically as of Monday, I think it was as of the 30th of September, and that showed that positioning had flipped massively to being long yen. And we
Oh
chatted about it. I was
God.
like, well, actually, we need to get a refresh of that because I'm pretty sure come Wednesday, Thursday, the positions probably actually flipped to being net short yen.
Well, this is
But
it.
yeah,
It feels like good. Like I said, good luck if you do trade the yen. Because if I'm looking at the chart and I'm thinking, old Ryan that used to trade, I would have been topped and tailed all over this.
mm, agreed. Yeah, no, interesting one, but no, definitely one to watch out for. And I think that from what we were looking at on the forecast is that the LDP are pretty sure nailed on to get a majority again.
Yeah.
But the if they can get more of a comfortable majority, which is 261 seats out of the 465 available, that would probably see certainly a little bit of a relief rally in the equity space. But then again, I think markets are a little bit rattled as to Ishiba. Is
Hang
he
on.
a hawk? Is he a dove?
So,
Yeah.
so I've not, there's just so much going on in the world. I've not really had time to kind of digest and have a little think about what's going on over there until listening to you frame it together and frame it in a way that even me with my crayons can understand. Right.
Mm.
So obviously, for those that aren't aware, this snap election is basically so Ashida came in as got voted an overwhelming new leader of the party that was already running Japan. So basically,
Correct.
to cement his position completely. So there's no like say no one can go, oh, what technically we didn't vote for you, kind of, but obviously in a Japanese accent. So instead of doing that, he's gone right.
I was waiting
I'm
for that,
now.
Ryan. Go on. Go
Oh yeah,
on.
no, definitely
No.
not. No,
No.
no, abort. Right, yeah. So basically, so he's new leader of the Japanese party in power. He's kind of done a very shrewd thing. Gone, well, do you know what? I'm pretty much nailed on to win an election if I call one. Let's call a snap election. Therefore, no one can doubt that I'm the right man for the job or I have a mandate or whatever. Now,
Exactly.
we know one of the things that is starting to annoy Japanese people domestically is the fact that they're sitting there and the Bank of Japan are looking to raise rates, like withdrawal liquidity and all that stuff, in the face of what is looking likely to be a global. I'm not going to say the R word, a global
Mm.
slowdown or whatever. And they're looking around going, "Wow, why the hell are we raising rates when we could have done it a year ago, 2 years ago, and now we're about to raise them, or we are raising them, just as everyone else is cutting." And look across the Pacific, and America have just cut by 50 basis points. So that's starting to annoy people. So, and again, I've just kind of thought about this whilst we've been on air. So, Kate, I apologise if it comes out completely bollocks, but there we go. Most of my stuff does. But is it possible that Ashida's played a very shrewd game here? And literally, because he's got the election, coming up very shortly to like solidify his position, he's basically saying, "Oh, yeah, I don't think we should be hiking rates," purely because he knows any voters that were kind of on the fence will now vote for him because he's being vocal against hiking rates. And then as soon as the election's over, he can just go back to saying absolutely nothing and let the Bank of Japan do what they want. Now,
Mm.
maybe I'm being overly cynical, but that ticks a lot of boxes for me.
Yeah, no, it's true. I mean, I suppose the only potential counter that I'd throw into that is that inflation in Japan is running at basically 3%. So it's kind of like it's not, and bearing in mind that it never got up to the high levels as it was here in the
Yeah.
UK or in the US. So I think there is that potential one in the back of people's minds of memories of deflation from the not too distant past, and whether you know whether the prime minister looking to actively step in on monetary policy decisions will cause a few of them in the back of their minds to be like, okay, well, actually, does this mean that we're either going to have prices continuing to spiral higher, or is this going to actually potentially lead us to go back to deflation, depending on what they do with rates?
So,
Yeah, and should he stay in?
right. So this is quite a controversial take here. Unlike me, I know. Um, But I don't believe that the link between inflation and monetary policy in the form of interest rates is anywhere remotely as connected as it used to be in years gone by. Because I think as the world has become more globally interconnected via trade, the whole idea of I think cheap goods find the best place for them, and there's always cheap goods out there. I
Mm,
just don't think there's that connection anymore between interest rates and inflation. Yes, I agree. There's definitely a connection between kind of cheap money, quantitative easing, and all of that, some fiscal policies like that, and inflation. But in terms of monetary policy, this whole like the old guard view that you hike rates and it drops inflation. Um, I just don't see that. I don't believe in that anymore. And I know that people are going to say I'm talking absolute bollocks, but that's what I do. But I just
mm,
don't see it honestly because again, right. Think about it another way. Raising rates by like 0.25% or whatever basis points. Is that going to really move inflation? No, it's not. It's like the world is so interconnected now that trade flows are so liquid. I really just don't believe the inflation related to interest rates argument. But maybe
mm.
maybe I'm talking out my arse. I usually am. especially on a
No,
Friday.
no,
Do you know what?
it's interesting
Just a shout out
to
to anyone from the Stafford that's listening. My apologies, I can't be there today, so attentions might be down.
That's good. And actually, Ryan, well, I'll stay with you actually on. I mean, the
Go on.
second big story of the week. Obviously, tensions in the Middle East escalating and the knock-on impact to oil prices,
Yeah.
particularly obviously in trading Thursday and obviously in Tuesday as well when the Iran sent off the missiles in the first place.
Yeah.
What's your take on the potential impact that if Israel strike on Iranian oil sector infrastructure,
So,
would that impact prices or no?
well, yeah, it will do. Well, yeah, I think any strike I think what we'll see is any strike that involves weapons, because we are looking at also there's like cyber that everyone's talking about now, the potential cyber strikes and stuff like that. If we're talking about big explosions that look great on telly, then you are going to, no matter what the price of crude is, you're going to get a knee jerk higher from wherever the base price is at that time. That's just the fact of life. However, why I'd be very, very careful in this is everyone's already leaping to they're going to Iran are going to just shut the Strait of Hormuz. They won't do that because they are, they're slowly getting like pally again with Saudi Arabia. As much as like it's people don't like to say it publicly, but there's a lot of countries in that region that are on speaking terms with Iran, and they all rely on oil. No one wants that strait to be shut down, especially the Iranians, because all of the Iranian crude goes to China. So they don't want to piss off China, and China will be telling them, look, we still need your crude because it's sold to them at cheaper rates anyway. So they won't be shutting the Strait of Hormuz. I just can't picture a scenario where that happens unless we are like World War III, in which case the price of oil was the least of my concerns. I want to, I already know my bug out plan, and it does involve the wine cellar of the Stafford Hotel. But I'll let you in, but I'll be charging tickets. But in terms of the reaction, I think if we do see anything on oil infrastructure, there is Tanker Trackers put out a really good analysis piece, which I'll dig out and post onto this in a sec. It's one of the most level-headed pieces I've read, and basically they're putting together like what could the targets be. One of them is this refinery that's like 100 odd years old. It has significant output, but there's ways of attacking or ways of providing the optics of we can reach your infrastructure without destroying the energy infrastructure. So again, it's I'm a fool for even giving a view on this because no one knows what's going to happen. But unless it was kind of all kicking off and World War III was like on our doorstep, which is definitely not. Personally, as always, which always seems to be the trade that pays on this kind of stuff, is you fade the initial jolt higher, because I just can't see it. There's no global support for either side to take it that far, and they both do rely on their global partners.
Yeah, no,
You know what's going to happen now, don't you? You know what's going to happen now. There's some
well,
super tank.
the next move's gonna keep going.
Super tank is going to be torpedoed in the Strait of Hormuz, and we right. Now I've said it. I'll just get long crude. Fuck it. Just buy as much as you can. Both hands.
the Ryan put.
Yeah,
The
exactly
inverse
that.
Ryan.
Oh Jesus, right,
never.
pub.
That's great. And so, actually, let's kick it across to you, Jay. Do you want to talk us through? Obviously, Tuesday was start of a new month on the equity side. S&P did very well in September, right?
Yeah, so you've got the S&P and Nasdaq up for September, which closed out the month. Obviously, there was a bit of a sell-off to start in the first few weeks, but we had the FOMC meeting, which kind of sparked the risk-on sentiment again. This week on the equity front, it was fairly quiet, apart from the Tuesday sell-off as tensions in the Middle East kicked off. But Wednesday, something to note was Nike reporting earnings, and we spoke about Nike 2 weeks ago with the new CEO. Their revenue fell short of estimates, and they're postponing their investor day whilst they're still in this leadership transition. So more bad news for Nike, but we're never going to expect that in 2 weeks the CEO's turned everything around. More revenue misses, but we'll have to see how that develops with the new CEO in place in the coming quarters. The other things then on Thursday, we had ISM data out coming in at 54.9, beating estimates. So another sign that everything is healthy enough in the US economy. And then, Friday, in about an hour and a bit, we've got the unemployment rate, which is forecast at 4.2, same as the previous month. And payrolls are expected to rise by 150,000. So we'll have to see how that data comes out in an hour. Obviously, if there's any shocks, we've seen the effect that labour market has in recent months. That's kind of the focus from the Fed now, with inflation being cooler. So that will be something to look forward to before US market opens.
Lovely. And just a quick stat on this one.
Oh yeah, come on! I've been waiting for this.
That man, Phil.
So the year through January through September for the SP 500 was the best start since 1997.
Good stat.
Which is a long time. I mean, I was a young man in '97. So I mean, yeah, and it is true. You know, the equity market so far through September has been incredibly strong in the States. So yeah, strongest year
Well, this
start.
is it. I'll tell you what. So actually, funny. So two things that kind of that reminded me of. One is it's something that I speak about often. It's like stocks do not need a reason to go higher. Stocks where like the S&P, so like the indexes, right? The indices, they need reasons to go lower, not reasons to go higher. In my opinion, like the path of least resistance is always higher. But counterintuitively, well, not counterintuitively, counterfact to that is that, in my opinion, markets like gold need reasons to go higher, do not need reasons to trade sideways or mean revert. Which is why I'm starting to feel gold is a little bit toppy. I don't know if Jess has got, Jay, you got any, have you got a gold chart up in front of you? What's it doing today? I haven't even looked. But,
I can get this here.
oh, it's basically flat on the day. But unless we get some more kind of impetus to kind of for the bids in gold, I think this is gonna possibly fall back lower. And then on the flip side, I think S&P should carry on going higher, unless we have something cataclysmic. But just what do you? So I'm going to pose a question to you both. Something that I'm quite adamant about is a figure like the NFP data that we've got coming out now. If you had the number sitting in front of you right now, someone, you get a little tap on the shoulder, someone goes, yeah, all right, guy, all right, do you want the NFP number? Right, if someone gave that to you now, that was me trying to do an impression of a bit of a geezer, obviously I'm nowhere near, right? If someone gave you the NFP data right now, do you think you would be guaranteed to make money when the figure is released?
I mean, no.
Yeah, well, there you go, right? That's the answer.
Well, one because my way of expressing the idea might be flawed in the first place.
Yeah, right.
So that might be number one.
That was a really smart way of saying I might get it wrong.
I might get it wrong. But no, I agree. And in terms of, I still think the market is undecided for most of this year. Certainly the equity market was treating bad news as good news, i.e.,
This is what I mean.
weaker prints
Yeah, exactly.
should cause credit cuts. But I'm starting to turn, now that the Fed has started to cut rates, that we're now more in a position where bad news, i.e., a significant kick higher, like 4.4% unemployment, or a massive miss in the headline payrolls, would actually be taken as bad news, because we're already almost guaranteed to have an easing cycle. Therefore, bad news during that easing cycle is more of an indication that demand isn't being stimulated, and actually that indicates the R word. That was going to be my take on it.
Jay, what do you think?
Yeah, I'd probably echo similar thoughts. There was
you cop out. You cop
Yeah,
out.
Jay,
You
come on,
absolute
mate. Come
cop
on,
out.
mate.
I was
What?
just bringing it back to gold when you were saying about like trading sideways and needing a reason to go higher. There was a chart that we did post earlier. I've tagged it in the top here that real money is really like lagging the move higher in gold. So I think this may not be a tailwind that drives price higher, but I think we all know real money is slower to join these moves. I think real money could be a reason that gold can be supported at these levels before another tailwind comes along to drive it higher. It was actually something we were speaking with some guys on Sunday, and they made a similar point re China, that you've got all the hedge funds, the fast money coming in now, but into the end of the quarter, into the new year, you'll start to see the bigger money mutual funds start to adopt heavier weighting in China. So a big move up in the past 2 weeks, as we know, and there will be some volatility because the move has been crazy.
I think
but
you
there's
just dropping
a
that.
few.
You just dropping that in because I couldn't make it to come and see you for a beer on Sunday. Is this a really kind of drawn out way of mugging me off?
It was good tapas.
No,
It was good tapas.
Yeah,
never.
this is exactly what it is. I've been
The
played like a
octopus was
fiddle.
exceptional.
Oh, you bastard!
We'll get everyone together next time. So yeah, that was an interesting point, and it's similar that gold, real money can kind of sustain prices here, and in
Well,
China we can see it
that perfectly
drop
ties
higher.
in what I was saying before, right? About there's always there's a difference between the fast money and real money. You know, it's the real money flows that kind of make this game, and if you can
Yeah,
kind of, if you have got the patience and you have got that kind of the the discipline to kind of play on the real money flows, again over a figure, like, you're going to get, it's going to be knee-jerk reaction regardless, wild like knee-jerk reactions in the NFP. But maybe obviously this is a bad example because no one's really going to want to be significantly positioned ahead of what could be a massive weekend for Middle East kind of conflict. But on a normal day, that you let that noise, that fast money do its stuff, kind of headless chicken, and you wait for the real money to come in. And it's so what it seems like what you're saying is on the China front, it's almost the same, but just drawn out over weeks rather than an hour. Have
yeah,
I misunderstood what you're saying?
yeah. Get it right.
Perfect. Yes. Yeah, I'm not as stupid as I look. Right.
There was I've
Beautiful.
got one. I'm gonna chip in with the Statman front today.
Yes, go
This
on.
was
No
a
pressure,
post
no
from
pressure.
Wow.
Joe Weisenthal that got my attention on Monday. Obviously, Shanghai opened on Monday higher again, and there's 2,230 stocks in the composite. Not a single one fell on Monday. The 4 worst stocks were flat, and then the 5th worst performing stock was up 2.13%, which I thought is not something
Whoa, so
you
what happened?
see.
These ones that were flat, they seem.
Yeah,
Did anyone actually trade them? Because that
I
sounds
mean,
bonkers.
I hope not.
Like,
I
what
mean
was the
The
that's
volume
5
in the
out of
ones
the
that were flat
that's
in the
out of the
day?
crazy.
2,000. But I thought that was
No, that is
pretty
good. But
impressive.
I'm now puzzled if like maybe like someone just forgot to turn those ones that were flat on the day, if they forgot to turn them
Yeah,
off.
the tickers on. Unch. Just some unch was going on. Yeah. Wonderful. Well, I'm
Right.
conscious we're 22 minutes
Yeah.
deep. That's basically everything from my end.
Perfect.
And yeah, obviously we've already spoken about it, but yeah, big afternoon ahead. And yeah, we'll rock and roll over next week.
Perfect. Well, guys, thank you
Yeah.
as always for coming in and helping us with not helping, as in co-hosting and doing the Friday Fix with me. You the brains. I'm the comedy foil, it seems like. Guys, everyone for listening, thank you so much. Yeah, if you are going to trade the NFP, keep it tight. I'd rather you didn't trade because who knows what's going to happen. Have a great weekend. If you can't be good, be careful. If you can't be careful, buy a pram. And we will see you all next week. Cheers, guys.
Pleasure. Cheers,
Thanks,
guys.
guys.
Bye.
See ya.